Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Kargamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen. If you guys are joining us for the first time, we do this show every morning to help answer any questions you may have about Market Chameleon tools, data, analytics. Also, if you wanted to bring up a certain strategy or something unusual you've seen, you could come on a show and ask it live. We provide a link to Zoom. If you click on that link, it takes you over to Zoom. Once you're in Zoom, there's a button at the bottom. Raise your hand, press on that. You don't have to turn on your video camera. Once we let you in, everybody can hear you, and you could ask your question live and direct. If you want to type in your question, you could also type it in on the live chat on YouTube. Will's watching that live chat and he'll read the question back to me. While we're waiting for questions to come in, what we'll do is start out taking a look at stocks that are trading in the pre-market hours, see if we could get some insights. If we don't get any questions come in, it's okay. I'm going to then navigate to a different section of the website, see if we could get some market insights or discuss, some strategies from a different section of the website.
Perfect.
All right, so let's start out with the pre-market report. These are stocks trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. I see 130 stocks made our percentage gainers list, 42 on our percentage decliners list. From that perspective, we're looking like we're setting up for a bullish bias at the open. If you look closely at this list, you do see that a lot of these securities are either small cap stocks. They could be an ETF, could be a closed-end fund, preferred stock, pretty much anything that is listed on the major U.S. exchange. And if it's trading in the pre-market hours and it meets our thresholds, can make this list. And we want to narrow down this list to a smaller group of stocks to get a little bit better insights. And what I usually do is start out with the S&P 500 companies. So let's do that now. And you can see here the filters above. This one in ETF, if you click on it, and you have a drop down with a list of ETFs to choose from. That first ETF, SPY, that's the S&P 500 ETF. If you click on that, let's do that now. You can see the list below will get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we see 18 stocks made our percentage gainers list, 6 on the decliners. And again, this shows that we're setting up a little bit, slightly towards a bullish bias at the open. All right, couple of these, we're still getting earnings coming out. As you can see in the video, made the top of the list, up almost 12% in the pre-market hours on 3.7 million shares. And here, that little E, that's an alert that NVIDIA just reported earnings either yesterday after the market close, which was in this case, NVIDIA did report yesterday after the market close. If a stock reports today before the market opens and is trading, then you'll get that little indicator E. And if you hover over that, the N, that's for news. So you could see here, you get some headline news. And obviously a lot of this has to deal with NVIDIA's earnings.
Yeah, actually, Rob mentioned, and I had read this somewhere as well, that NVIDIA, their earnings, I guess they make like the key chip in all the AI development. So
Right.
it's a very
So
important chip for like ChatGPT and any other AI that's being developed. So
yeah, they mentioned that ChatGPT uses a lot of processing power, right? Because now what you're doing is, instead of just providing a list of links based on a keyword, it actually has to process information and come up with an answer. So that that is much more intensive. People kind of don't see that in the back. We see it in the
yeah,
background,
it's
right? When
interesting you
people
say that because we've
clear,
had this discussion internally, right? Everything, there's a cost, right? Nothing on the internet is free. So it's
not free.
expensive to produce. And you talk about this chat GBT and, oh, it's great, it's free. You type in, well, it's not, it's very expensive, right?
It's
For
very, yeah, it's very expensive to run, even if you're efficient, because what happens is, you have computing power, right? And computing power, it takes up, that means you need, you're using up not only electricity and energy, but you also need, servers to be able to handle it, right? And you need to maintain those servers, and you need to maintain the infrastructure for it and the security of it and all. So all this is a cost. And from what we're seeing, that the internet, as it's starting to mature, and we rely on the internet to get a lot of free information. We'll see how that develops, because every year the cost of running a internet website continues to go up. You have you got to maintain hardware, you got to replace some hardware, you need software engineers to monitor the performance of it, security of it, the cost of the data centers. All of it is going up, and we're seeing some of those costs now. Companies starting to try to figure out, how do you provide information, but you still need to maintain it, right? You need to somehow cover the cost of continuing it, or the service will just degrade, or have to go away. You can't do it at a loss. Look, right now, Twitter, they're trying to come up with different solutions of how to cover the cost of maintaining Twitter. As you can see, and I think Meta, Facebook is also starting to look at it from, well, where else can we generate these revenue? We have 2 billion people, and ad revenue has been good, but now they're looking at subscription-based services and so forth. So you still need to find sources of revenue to pay for those escalating costs. Let me see. Well, if there are no questions,
we did have a question from Mr. Orange Glass. He was asking, hi, Dimitri. I have a practical question. In your opinion, in unusual option activity, what filters would you select to extract stocks that are technically or about to be in a bearish trend? Is there a way, I guess, to look at the unusual option activity to identify maybe stocks that are in a bearish trend, is what he's asking. Correct me if I'm wrong in the chat.
So and thank you for the question. So here's the unusual option activity, and this report, the first thing it points out is that there's a lot of option activity that's higher than the average daily volume, right? So here in AMC, we see that on average, the average daily volume is 352,000 contracts per day. Yesterday traded 934,000. So that's 2.7 times its average daily volume. And here we see that in the last 12 days, it's 5 of those last 12 days that there has been option volume greater than average daily. All right, and we could click on that and open it, but I'll just keep it at that for now. Let me come back to this. Here, we list any known catalysts. Oops, hold on. What did I do there? Let me go back to AMC. When you click on one of these columns, it resorts it. Okay, so there's a sort functionality. I just clicked on it by accident, just because I wanted to show you guys this column. So when there's unusual option volume, sometimes there's a good explanation for it. Usually, if there's an event, a scheduled event coming up, and that event could cause the stock to have more volatility, then people will trade some of those options. Option volume will go up because they'll either want to play the event or hedge their positions prior to the event. So you do see volume going up a lot of times prior to a catalyst event. So when we pick it up in our database, we don't know all the events, but when we're monitoring for the events, we have a team of people who work for us looking for these events, reading through press releases, visiting the company websites. We subscribe to other feeds. So we try to get those events for you. And when we know of the event, we'll list it here. So February 28th, we're picking up that AMC scheduled to release earnings. So we're coming up close. It's not tomorrow or whatever, but that's one thing to keep in mind. Another event, could be here hovering over. Maybe it's not earnings, but sometimes companies will have other scheduled events in between earnings. So here's one shareholder meeting. Sometimes they'll have, investor meetings. They'll attend conferences or hold their annual, shareholder meetings, whatever. If we pick it up, we put it there, so you kind of have a sense. Okay, this might be what's going on. And one of the things when we look at volumes, right? Why do we study volumes and prices? So when we look at either volume trading activity or price movements, as like financial practitioners or analysts, you want to, I think like a lot of people will take a price chart and try to predict the price, right? So in financial analysis and models, you're trying to model human behavior. What's going on? What are people doing? What are their expectations? How are they behaving? You're trying to understand that, right? So not so much, well, here's a price that's moving up, so it's bullish or bearish, but you're trying to use the data, use the prices, use maybe the volumes and their inputs into a bigger model to understand what do you think is going on. Just like the Federal Reserve does it. And if you go, you could read a lot of like reports that Goldman Sachs or Bank of America, and that's pretty much what you're trying to do is use those raw data as inputs into a model to try to understand how are people behaving, what are they thinking. So like really quickly, I'll just give you an example of a stock price, right? When we look at a stock price alone, in a chart, it's going up or down, as a model, I would have to take that price and try to extrapolate what do I think people are behaving. So for example, based on this price, what kind of multiple are people giving the, or let's take an example like a very easy one, multiple of earnings per share, PE. How does that compare to historicals? Are people giving it a higher multiple than average, lower multiple? Because then I could see how people's expectations are changing. Or if they're giving a higher multiple, maybe I could run it through a model and say, well, what kind of earnings growth are people pricing in? And is that, extremely bullish? Is that in line with what the company has done in the past or what its forward estimates are and so forth? So when we look at, data, what we try to do is kind of extrapolate the human behavior. What are people doing? What are their expectations? How are they behaving? Okay, so here on one of the ways that we look at it is we could monitor the order flow and try to determine from the order flow, which way are they entering the orders? Are they doing it more from the bullish side or bearish side, right? So that's one way. How are they, if they're buying in general, if more people are buying puts and selling calls, then a lot of that order flow is coming in, in a bearish sentiment, or that's what we call bearish sentiment. It could be betting on the stock going down. It could be hedging a position, hedging existing positions, but that's the way it's coming in. So let's take a look at AMC here. Remember, that's what we're trying to do, is model the behavior. Who's doing what are they doing, why, so as you can see here, kind of something came in closer to the end, which gave it a more bearish type of flow. So from here, so the March 10 puts, a lot of it came from March 10 puts. You can see there are 1.3 million deltas. And look, we don't know the whole story. We don't know if there's a hedge being put on by somebody. We don't know if, that they're definitely, their intent is having the stock go. They think that the stock's going to go lower and they're betting that way. But we're kind of starting just to extrapolate what's going on. How are they behaving? This doesn't look, and look how it came in, as a one big drop. So it wasn't consistent throughout the day, and it doesn't look like that it just kept accumulating, but something happened over here. Looks like a big trade, right? And that's what we're trying to figure out. Well, what happened there? For the most part, we see that delta wise, right? So when you're selling a call to a dealer, the dealer buys the call. That means they're long delta, and that puts pressure on them if they want to get delta neutral to sell stock. You buy a put, the dealer sells a put. They're also long deltas. To neutralize that delta, they would have to sell the stock to get delta neutral, right? That's what we're monitoring here. And these were the pressures coming in, how we interpolated from yesterday through our inputs or models. If I come down here, you can see a lot of it. So that delta, a lot of it came from an institutional trade, about 58%. You can see much higher than before. Right, so this is that gray area is the average daily dollar volume in the options from institutions, and you could see yesterday, it exceeded it by a great amount, and most of it, and you could see here on balance, whatever big trades, the accumulation of it, they created downside pressure, 2.2 million. Okay. And you can see here from vertical spreads, multi-leg trades, similar situation here. But from the multi-leg trades, we see that institutions, about more neutral. So I'm going to keep coming down here. Just, I'm not sure. Oh, yeah.
We did have a couple questions. Robert was asking, Will, please ask Dimitri if the bullish bearish list on this report is due to a chart crossover or other indicators he is discussing.
Yeah, so this here is looking at the option trades, right? And interpolating when the option trade comes in, it looks at the trade and it says, okay, based on our algorithm and surrounding data and analytics, what do we think the end user was doing? And what do we think that the liquidity provider on the other side was doing, right? So we're looking at the liquidity taker versus the liquidity provider. So the liquidity taker is the person that wants to initiate the trade, right? Like, if you enter a trade from your E-Trade or, Interactive Brokers, TradeStation, whatever you have, you enter in a trade, you're trying to initiate a trade. Then there's a liquidity provider providing you that liquidity, taking the other side of the trade, if they think there's whatever edge in it where they want to do the other side. Okay, so we're what this model is trying to do is figure out what are the liquidity takers, on balance, liquidity takers, people who are trying to initiate trades based on their trading activity. Either it doesn't matter, in the calls and the puts, they're buying, they're selling. On balance, what kind of pressure are they creating on this stock? So here on balance, we see that there are almost 10.7 million deltas coming from the bullish side, 13.2 million from the bearish side. So if we offset them on balance, there's more coming from the bearish side than the bullish side, and on average, it happened around $6.39 weighted average price. So around like where the stock is probably around now. And here we see that a lot of it came almost like at right at the end of the day, right? It looks like maybe it was like one or two trades because you get these big dips. So this is the balance as it progressed throughout the day. So it's cumulative, right, from the day. So if there's more and more bullish, this green area will come up. If there's more and more bearish, it'll come down. If it's a really big trade, so you'll see this like a big line like this. So something happened yesterday, right around the close. Maybe somebody got out of it. It could have been somebody getting out of a trade. It could have been somebody initiating, but that trade we interpreted it as a bearish delta trade. Okay.
Hey D.
Yeah.
We are getting some questions from new chameleons have come into the chat, so I wanted to get to them. Richard is asking, how do you factor in all the bot activities and interpreting human behavior? I'm assuming by bot activities he means algorithms coming into the market. Correct me if I'm wrong, Richard.
Yeah, maybe if it'll clear up. I'm not sure about what he means by bot activities. These are looking at option trades, so these are looking at, options trades that are initiated. I'm not sure about what he means by bot activities. As far as these options trades, I'm not just certain if he means like automated option trading. So
yeah, Richard, just let us know what exactly you mean by bot activities. I'm assuming it's algorithmic trading, which obviously those are programs that have been written by human. He's saying algorithms, correct algorithms.
Okay, so when we look at I'm going to leave this page for a second. When we look at the options chain here, right, you see bids and prices and so forth. These, for the majority of the bids and prices, right, are created by liquidity providers, right? So they're passive quotes. They're producing quotes that the dealer is willing to buy at a price or sell at a price. And they're probably competing market makers in there. These are run by computers, by bots. So these are liquidity providers are not entering orders through or creating quotes manually. They have to, because all these option quotes, it's a derivative. These are options. They're moving with the stock price. Implied volatility is changing. They're updating based on different, whatever their model is looking at, wherever it's picking up, I need to change my implied vols here and there. So the bots, for the most part, bots are liquidity providers, right? There's really no other way to provide liquidity and move all your prices, unless you're doing it algorithmically and using a black box or bot. But that is one side. That's where we're assuming those are not actively trying to, initiate a position. They're just providing the liquidity, and those are the ones will be on the other side of the liquidity takers, and they're going to need to, balance their books, hedge their deltas, and so forth to try to reduce their risks. So again, in options, the bots primarily are the liquidity providers or market makers, because it's not possible, right? It's not possible to manually change each of these quotes, right? There's too many quotes, and the stocks are moving around quickly, so they're pegged to, to whatever the stock price. They're pegged, to maybe other things in the markets that they're seeing, and they're basically moving along that way.
Remember when we first started this business, you would ask them to move particular quotes if you felt it was out of line with Timber Hill.
Right. Like, yeah, if there's something out of line, then you would say, like, listen, as a market maker, yeah, you could take it now, but before you could say, like, look, you go to another specialist or market maker and say, look, I think you're too low, I'll either buy it there or move it, so they weren't obligated to trade with another market maker, because the liquidity is supposed to be for, the end user. So you would ask them, yeah, like, sometimes they'll sell it to you, or sometimes they'll just move and say, oh, yes, it was too low. Now you could do it electronically.
And there were some interactions that were negative to the P&L where when the business first started to change, and they allowed a lot of people to write algorithms into the marketplace, where our systems on the exchange floor were much slower than people who had written algorithms, which I don't think exists today. And we would, constantly selling deep options, below pit, which was not fun.
Right. So a lot of it has changed. So those are primarily the bots that exist, because, to be a bot, you probably have to plug right into the exchange, and, the exchange has rules for bot. Once you're plugged into the exchange, or they're in your broker dealer, or even if you're going through a broker dealer, there are rules that you have to abide by, right, to access their, like, auto cancel, replace, and so forth. But there could be bots that are takers too when something's triggered, but that will look, it'll look, if a bot was triggered or somebody entered in an order, well, we look at it from the perspective, same side. What was it trying to do? What kind of pressure was it creating on the liquidity provider, right? That's what we're trying to do, say what kind of person providing the liquidity. The assumption is that they're just balancing their book, because they think that, it's just the price is right to buy and provide that liquidity, or to sell and provide that liquidity. And if they're balancing their book, what kind of pressure is it creating from the perspective of delta? Now you could analyze it from different perspectives. You could look at the Vega. You could look at, are they trading, options before earnings, after earnings? There are different ways. The idea is to start taking the data and trying to model the human behavior of what's going on. What are people doing? What are they thinking potentially? What are they doing? How are they setting themselves up? Can they, if they're sending them, and sometimes you could try to use it to anticipate, the next moves. Are they, do they have too many long positions, too many short? Is it reaching extremes? But really, you're trying to model the human behavior in the markets.
Awesome job, D. We're 2 minutes into the open. We did have another question. I wanted to make sure we get it. So maybe tomorrow, I think it was from Arthur, was asking, is there a way to back test an option strategy, say for the past year on Market Chameleon? So we had a bunch of new users in today asking questions. So maybe we can try to get that tomorrow. I'll send that over to you, D. Great job, my friend.
All right. Thanks everyone for joining. Everyone stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Yeah, thanks for all the new users for joining and all the regulars. Awesome job, everyone. Great job, D. Have a great day and trade in peace. Bye-bye.